As we look across the globe, the main markets are very strong currently. US market sectors did very well in the past trading session, and the main market registered pretty much broad-based returns across literally every sector. We saw the S&P 500 just do a beautiful technical bounce from these very strong smart money buy levels as revealed in the CTKS method, and that bounce was significant. The S&P 500 overcame multiple levels of resistance. The key is to understand now, is risk back on? Are the markets going to rally? Let's find out. Hi everyone, I'm Ken from CryptoTradingKS, where I share my 30 plus years of experience in financial markets to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. If you're new, a very warm welcome and welcome back, KS family. Let's run the numbers. Bitcoin is currently up 0.70% to 22,413. Ethereum is up 0.46% to 1567. We saw in the last trading session on the main markets, the VIX, the fear gauge of the main market, came down. We saw a rebound in risk appetite through junk bonds and high-yield corporate bonds. They've basically made a very nice pattern which suggests that the markets are going to start rallying. We can see that the Nasdaq came up and also gold came up. The dollar hit resistance and retraced. We can see that yields are starting to roll over and bond prices potentially making a lower low, but potentially also starting to turn around, because we'll look at inverse real rates in a minute. The other thing to understand is that there's positive price momentum potential inside oil as it's very close to overcoming resistance. The S&P 500 bounced very nicely from its smart money buy levels below the 39.38 mark. The S&P 500 is currently 40.45. Please let me know in the comments, do you think this is risk-on behavior where the markets will continue to go up, or risk-off behavior? We also saw that the DXY couldn't penetrate the smart money sell level at the 104.886 mark. It's currently 104.527. It is coming down to a smart money buy level, so expect some minor retracement if we get a technical bounce here inside the main markets and also crypto. When looking at inverse real rates, it's actually overcome its own internal resistance, and gold is reflecting the fact gold is heading up. If you're in the gold trade, I would suggest you're very early, but always have your three-dimensional thinking in mind. What is three-dimensional thinking? It's all about the CTKS code. We always assume that the market can go in 3 dimensions. It can go down, or go flat or neutral, or go up. We consider the for case last and the against case first. Remember that you control the trade or investment, but it's the market that controls the return. And that return is based on your active learning, your knowledge and your courage. The market always penalizes blame and gambling. Gold is currently trading at $18.55 and 84 cents. You can also see that gold came down to the 1805 level, which was a smart money buy area, and it was a very strong one, and it bounced just like the main markets. A lot of people don't understand why different things correlate and decorrelate. It's because of their internal structure, and you can see the internal structure of any asset class through the CTKS method. Always remember, price is always moving in a wave and ping-ponging between smart money buy levels and sell levels, buy levels and sell levels, buy levels and sell levels, buy levels and sell levels. You get the idea. When you look at a chart with normal eyes, it's very hard to know where the smart money will come in and buy or sell. That's why the CTKS method exists, because it's all about showing you where smart money will step in and actually support price, even if price falls climactically down. This methodology is just gold. It actually helps you to create certainty where there would be just rampant uncertainty. In the link in the description of this video is a link to the CTKS Method Markup Request Form. You can actually reach out to me and let me know what you would like to see marked up. When looking at the 9 sell-offs and recoveries in the S&P 500 since 1966, we can see that the S&P 500 is coming up very, very nicely. We know there's smart money support just below this low. We're making a series of higher lows. That is very, very powerful for the main markets. We also know that Bitcoin cannot escape the stock market's gravity. We've seen a lot of interesting developments inside the crypto industry recently. We saw one on the 6th of February when we had the first golden cross, and then on the 1st of March we had a secondary golden cross. There's been so many crosses. What actually occurred? The last time we had our first golden cross, we saw negative price momentum inside the market. It's looking exactly the same this time, and we've got a very full couple of weeks ahead of us leading up to the FOMC meeting on the 22nd of March. Things could get pretty volatile in that intervening period, but one thing to note, in the past, Bitcoin has absolutely and utterly rallied into FOMC meetings. It doesn't mean it's going to do it again, but it has had a history of doing it. Keep your eyes on price action. We can still see that Bitcoin is under a level of resistance. It's trying to challenge this smart money buy zone at around the 22,578 level. Bitcoin is currently 22,411. We can gauge risk-on and risk-off sentiment inside the crypto market by the longs and the shorts. The longs are just flattening out at the moment. The shorts have rampantly come out of the market across the weekend. But we can see from price action in the last 24 hours, there's been both long and short liquidations. In the past 24 hours, there's been 36.68 million in total liquidations across 17,515 positions. And when we look at 24-hour total liquidations, around 52% have been long. What about the past 12 hours? Going the other way, say 65% short. What about the past 4 hours? Gone the other way again, around 78% long. And what about the past hour? Gone the other way again, 91% short. So you can see the market is trying to find its direction, but it's still under resistance. Just keep that in mind. The greatest gainers across the past 24 hours, top 100 cryptos: Conflux, Maker, Immutable X, Synthetics, SSV, Filecoin, GMX, Optimism, and DYDX. There's a lot of X's in these top movers. And we can see when we turn to the top losers, there's not too many. In fact, the top loser is TWT, and the rest are very, very low in terms of percentage losses. The Beardy CTKS Partial Masterclass Scholarship Awardee was announced across the weekend, and that person was TF Theta. Congratulations, my friend, and also thank you very much for your kind generosity to Beardy. The CryptoTradingKS Masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis using the CTKS method. That's a method of technical analysis that I personally invented specifically for crypto that accounts for exponential implosions and explosions in price and updates normal stock market and forex analysis. You can see that there are a lot of lessons inside the masterclass, and it's all exponential learning enabled. I used to be a lecturer in first and second year university statistics, so I know how to convey information to people. First thing, you need your foundations. Then you need to understand the trends that are occurring inside the market, and there's a lot to understand. Next, you need your timing. You need to know how to detect things that are changing. Before you actually buy or sell, having real wealth and positive excellence is incredibly important. And then you come to the trigger section where we actually do trades. And then there's also a living masterclass section where all of this information is updated to keep current with current events. There's also level 1 CTKS Method Standards Certification inside the masterclass, as well as level 2. You can see marking up the charts is probably not as easy as you may think, but any professional discipline, and this is one, requires a lot of hard work. But the rewards are limitless. There are currently 22,758 cryptos in the crypto market. You can see it right here. It's very important to know why the masterclass was created. So if you come across 2 testimonials, looking at cryptotechnicalanalysis.org, you'll see exactly why. And you can also see it's a very, very well-loved course. It's equivalent to a university degree. We go through a very high-level structure of the masterclass each and every day, from the foundations to looking beyond the crypto market to finding the market's focus, having positive excellence and mastering emotional control, and then coming in and buying and selling. Investing and trading is a serious endeavor. It's not a gamble, and it's not fun in the real sense of the word. You're actually undertaking the serious collection of knowledge. In Zone 1 and Zone 2, people think that it's just a bit of a gamble. It's a lot of fun. Put all the money on red and see if you win or lose. When you go to a casino, you win some and you'll lose some, but basically you'll lose overall. But professional gamblers are very, very different. We're not talking about being a professional gambler. We're talking about understanding the rules on which the market operates. And those rules are always modifying and changing. And mastering fear is also a critically important thing to do. There's much more to trading and investing than a lot of people realize. A lot of people ask, just give me the best 5 tokens that I can invest or trade in. That's pretty much the same as like saying, I want to be a doctor and I don't want to go to university. I don't want to do the degree. And if I do the degree, I don't want to do my rounds. I just want the mansion. I just want the Mercedes. I just want the success. It's not like that. You must put in the work and you must know the rules of the market. Each day, every day, I give you tips and tricks on how to identify winners inside the market, and a lot of it comes down to Bitcoin's gravity. For example, when you look at the crypto market, it's very, very powerful to know that Bitcoin's gravity actually rules all the alts. What are alts? They're everything other than Bitcoin. You can see here, Ethereum, that blue line is Bitcoin's gravity. When Bitcoin came down, what did Ethereum do? Did it say, no, I'm just going to ignore Bitcoin? No, it came down with it. What about BNB? Did it come down when Bitcoin came down? Yes, it did. What about XRP? Did it come down? Yes, it did. But look at that recovery, because there was some fairly good news on the fair notice defense. But since you can see that Bitcoin's gravity, this up and down motion, is actually getting now over accentuated to the downside. What about ADA? Did it come down when Bitcoin came down? Absolutely it did. But you can see that it had a really good bounce. You're looking for potential and momentum when you're trying to do your selection. Well, what about these things, Ken? What is that? USDT, what's that? That's Tether. What's USDC? That's Circle. What's BUSD? That's Paxos, Binance USD. What are these actually? They're stable coins, but it's important to know their momentum and to actually understand they're not stable either, and they never have been. Due to the SEC enforcement action on Paxos, the issuer of BUSD, the market capitalization of BUSD has fallen to 10th spot and Matic has taken over. So now Matic is in the top 8. Did Matic escape Bitcoin's gravity? No, it didn't. It came down when Bitcoin came down. But what did it do next? Sharp angles reflected, they reversed up. But is it actually following Bitcoin's gravity? Well, let's have a look. Tell me what you think. Do you think this is following Bitcoin's gravity? That up and down action. Do you think it's reasonably correlated? Please let me know in the comments. And you might say, Ken, you're just cherry picking. I don't cherry pick. Let's go a little bit back. What about this? Do you think it's following Bitcoin's gravity? Oh, go back a little bit more. Do you think it's following Bitcoin's gravity? Do you think it's following Bitcoin's directional correlation? That's not correlation. That's directional movement, directional correlation. I've been sharing recently trades because I believe when the green days come, anybody can make money. But if you can make money going long at spot, which means you actually buy the crypto, you're not leveraged, you can't get liquidated, but you buy it on the way down and you profit back on the way up, I believe that really takes skill. And that skill is something that I try to share with you. I was asked recently in the comment, when we look at Bitcoin's chart, what is this squiggly green line? That's the 50-day moving average superimposed across Bitcoin's price action. One thing is for sure, these moving averages do not support price. These Stanfield zones do, formed through the CTKS method. Just be aware, over the next week, we've got some incoming volatility as the Fed Chair Jerome Powell does his testimony over 2 days, and then the job opening statistics come out. The Mt. Gox unlock and the US jobs data is coming out. The US PPI data is also coming out, and inflation data as well, leading up to the FOMC meeting. Just bear in mind that in the past, the FOMC meeting minutes, when the FOMC meeting was actually done, price rallied up before it and then sold off after it. I don't know if that's going to happen again. All we can do is look at price action and stack our probabilities. There could be a lot of incoming volatility, and just realize we're below a smart money sell level from 22,552 to 22,611. Bitcoin is currently 22,474. Despite this, Bitcoin is trying to get back above that level. When we reach approximately 22,650, it's looking better, but we've had spikes above this particular line before, so just be aware of your three-dimensional actions. The next major smart money support is down at 20,800. Knowing how to mark up your charts with the CTKS method is literally a license to print money. You must know where the structural support and resistance is inside a market and inside what you're trading. If you're not doing that, you're just guessing. And don't forget, the CTKS method is formed from all of price action, not just recent price action. The CTKS method can only be learned inside the masterclass or through a minor course on ctksmethod.org, but that's the only 2 places that you can learn about it. Have a great day or night ahead, my friends, and I look forward to catching up with you tomorrow. Bye for now.